Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First, I would like to let you know that I am appearing on BNN Bloomberg at 5:40 this evening to discuss our analysis of Rogers Communication in light of the outcome of the court case, whatever that may be, which is supposed to report at the market close. And second, even though it's not part of the FANGs, for today only, in light of the fact that Tesla has also crossed the $1 trillion market cap threshold, you might be interested in a quick preview to see what might lie ahead. Now, before we take a closer look at the FANGs and Tesla, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Let's start off with Amazon, and this is very interesting. Look at, if I put that technical line in place there, you can see that the stock is just about to break out over that long-term base, which actually runs for about a year. It did very briefly about mid-year, but it quickly ran into resistance at its HB3, which is 16 times book, and quickly set back. However, at and close to its HB2, that is a 10-year valuation low. Now, the only thing that concerns me, or maybe the two things that concern me, are first of all, of course, now we're looking at that turn down in earnings for the next quarter. But the other thing is, if we go to the far right on the table of values, you'll see that the implied return on equity has fallen to 19.35%. And that's down from the 5-year compounded rate of 44.06. So the growth rate of Amazon looks to be slowing. I shall be watching that HB2 valuation level closely. In the meantime, we have to say it looks as if the stock is probably heading up, but you got to tuck those kinds of things away for the longer term. Alphabet, well, you know how much I have liked Alphabet for a long time. And when the stock actually got up to what had been my initial target, its bubble price, which is 7.4 times book value, you know, I kind of decided to hang on tenaciously rather than sell, as had been my intention. And the reason is that if we look at the earnings and the fair market value, we'll see that they have been in an acceleration phase and most recently has picked up even further. The stock is breaking out as we speak, and as I recommended to last week to the new BNN viewers, this might be a superb time to pick up some Alphabet for potentially a move to its HB1, which would be 10 times its book value. Microsoft just cheerfully chugs right along. Actually, maybe I should amend that a little bit. It's actually, the chugging along is actually sped up. They had very, very nice third quarter earnings. Certainly, my HB3 target price, which would be 16 times book value, remains very much in play. But we'll have to see what happens when that stock gets there. And notice, by the way, that nice little uptick in the earnings and the fair market value here as well. Nvidia, well, Nvidia came up to its HB5, which I thought might well be the end of the stock. It hung around there for about a day or two, and it just blew right through. And looks very much as if it's heading rapidly for the HB6. And this, of course, is without knowing what the third quarter earnings are. The company is not reporting until November the 17th. So that's kind of promising for those earnings. And I guess we'll just have to hang on for the ride in this one. Apple, well, here's Apple, and it is running right up against that downtrending line there, which is the HB6. And it needs to break out if it's going to go any higher. Here, if I take a much longer view of the company, you'll see that there has been some acceleration here in the earnings, and perhaps that'll be enough to drive the stock out of its current peak trend at its HB6. And that wouldn't be surprising given the fact that the stock has been the company has been steadily buying back stock, which is tending to push up the ROE higher and higher. So I am sticking with the stock, even though it actually has not given me a buy. Netflix, well, remember Netflix here. Let's see if we can get the technical trend going. Yes, there you are. You can see, okay, that absolutely flat technical trend. The stock, which stopped the stock up until just very, very recently. Even when it broke out here above the HB3, it kind of ran up against the technical resistance and wouldn't go any further. But fairly recently, that has happened and it's now broken out. So we put it into the Phantom FANG portfolio. And I think that the stock here heads up for its HB4 price. Now, one thing about Netflix, and this is looking at the longer term here. The last time that Netflix got up to anything much higher than its HB4 was in a period when the earnings and the fair market value were speeding up. But since that time, the growth rate has been almost, I mean, it's been good, but it's been almost dead flat. And with it, the valuation of the company has been kind of pulled down, and it's now looking as if it's in a channel with the HB3 more or less in the bottom and the HB4 more or less in the top. We're talking about 16 to 20 times book value. I'm not sure that the company will be able to get above its HB4 this time because it's pretty much been stopped all the way through. However, that's still $765, which is a good solid 10, 12, 13% from here, right? So we're not going to worry about that right now. Facebook, well, here was Facebook last week, okay, because what I wanted to show you was what happens when a company reports and we get a new balance sheet in. So here, that little diamond there is the last balance sheet that we had. So we were looking for one this week, and, well, we got it. What happened? It turns out that the company has been buying back stock. It's been pulling down the book value per share. You know, on the surface of things, as of last week, we thought we might be close to a bottom. This week, we're nowhere near one. And the other thing, of course, that is important is that the earnings forecasts have turned down sharply. So this is going to be a real issue. If I go back and I show you the 5-year picture of Facebook, you'll see why I'm not necessarily jumping in right now just because we've got a setback. Here's the stock, which peaked at its bubble price, 7.4 times book value. Of course, this whole period here, that was the last scandal. And why this is important is because we've got another scandal on the way, and look what happened to the stock. It fell not one break point, that is from its bubble price to its mid-super growth price, 5.5 times book, but it fell to its second lower breakpoint, its low super growth price, and actually a little bit below that. But that happened just at the tail end of the market sell-off in 2018. Well, anyway, the stock got there again. I got to show you this one here, right here. This stock came so close in the COVID-19 sell-off, came so close to its super growth price, I could practically taste it, and I would have virtually sold my soul to have purchased every share of Facebook that I could have afforded had it got there. Didn't quite get there. I didn't do it. The stock did phenomenally well anyway, but it peaked out at its bubble price. Setback. On that setback, we said, okay, everything looks good, and look at the earnings acceleration. So we said, I think we can get back into that stock, and up it went again. But this time, it's running into a different kind of issue. In other words, another scandal. And I think that prudence would very, very much suggest that you wait and see what happens. I don't think that the worst is over yet, and that turn down in earnings and the fair market value would seem to underline that. Well, that's the FANGs, but I promised you a quick look at Tesla. And here's Tesla now crossing the $1 trillion mark. In fact, it's $1.2 trillion. However, here, of course, is the potential contract with Hertz and quite possibly Avis to supply a huge number of Teslas to the rental agencies, and of course the stock just accelerated very, very quickly. But it has hit its HB7 dead on, and today, by the way, it's still holding right there. So we're going to have to see whether there's enough momentum here behind the stock to carry it any further. Right now, I wouldn't do anything about Tesla. I probably wouldn't be a buyer. I certainly would not want to be a seller until I see just how strong, how able the stock is to break out and move up one more breakpoint. Now, in summary, I've been very informally running what I call my Phantom FANG portfolio, consisting of the FANG stocks that I've been comfortable with. They were Amazon, Netflix, Microsoft, and Nvidia were its cornerstones, but I had also included Alphabet, which I had refused to sell at its bubble price peak, that 7.4 times book, and I'm glad that I didn't, as it appears to be definitely breaking out, as I loudly signaled last week to our new viewers from BNN. Okay, you just tuned in just in time to do something hopefully quite profitable. As I said last week, I was planning on selling Nvidia when it reached its HB5 price, or 26 times book value. It got there, but it broke out immediately and is streaming almost vertically towards its HB6 price, or 33 times book value. I had observed that you might want to wait for its earnings numbers due on November the 17th. And clearly the market expects great returns and is discounting them right now. I had crossed my fingers on Apple to see the effect of the new balance sheet, and you can see that I am hopefully temporarily on the wrong side of the fence. So we'll have to wait there. Facebook, or Meta, as it's now known, has wisely changed its name in the hopes that the mud sticking to it will wash off quickly. The company has got by in the past by dissimulation and bluster, and clearly is hoping to do so again. However, the Phantom FANG portfolio is out of the stock, and we will stay that way as its current issues are too close at hand to warrant gambling on a quick recovery, if at all. My key takeaway for this week is I have observed again last week that as far as the overall market is concerned, it is simply tired of selling off and was cheerfully heading north again. Third quarter earnings, especially for the FANGs, are almost all in, and so are the new balance sheets. And I have to say that my low super growth price, that's 4.5 times book value for the Standard & Poor's 500, seems reasonable and remains very much intact, possibly led by most of the FANGs. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.